What we're going to do next now is the audit type selection, and let me just go through the questions related to 10.15. Now, as I have mentioned before, at the moment, the kind of procedures that are built into RAC, it's just an audit at the moment. We do hope to get a review built into this as well, but that's probably only going to be in next year sometime. The process there is really going through what has been already put into RAC and comparing it with what the requirements are for a review, and then going and deciding whether there's enough crossover between the two that it makes it work and worthwhile to do. Otherwise, we will rather go and redesign something like we have our attorneys' trust methodologies and things that are separate, and that might be the case. The next question that you're asked on 10.15, and this is where the 4 different sized companies come in with a RAC, and you'll see if I hit this drop down, I'm left with a large, a medium, and a small. At the moment, no RAC micro is available, but if I quickly flick over to my micro client, and I'm going to go to that very same drop down, and you'll see now micro is an option here. Okay. Now, the reason that RAC micro was not initially visible is we've actually built a few controls into the background to make sure that before you select RAC micro as your file option, we want to make sure that you are definitely dealing with a low-risk client. We don't want clients coming back to us and saying, well, they decided on RAC micro, and as a result, their audit didn't go so well. And you'll see that there is this RAC micro tab at the bottom of the screen, or it's one of the sheets available in this workbook, and this lists a number of considerations that we would like you to make before using RAC. And we're talking about the PIS score of the entity, the fact that this must be a voluntary audit, it can't be a statutory audit, all these things trying to push it towards being an owner-managed business rather than a high-risk client. Now, that's not to say that an owner-managed is not a high risk. Obviously, there are various things in an owner-managed that could also make it high risk, and there could be risks involved in accepting that audit. But unless all of these questions are answered with a yes or are not applicable, that RAC micro option actually doesn't become available in this drop-down list. So if you get to this point and you do want to use RAC micro, please remember that you need to go and fill in that questionnaire on the next sheet in order to access RAC micro. If you don't, it's not going to be there. If you're not bothered with RAC micro, then you don't need to worry about the sheet. The sheet's only there to be completed if you want to use RAC micro. Okay. So just in terms of what does it mean, and I'm going to flick back to my medium client quickly. What does it mean? What is small, medium, large, and micro all about? Now, on the one hand, what I want to say is that the difference in those questions is not necessarily about the size of the client necessarily. What we're looking at more is the risk profile of your clients, and that's what we're focusing on. So the large, medium, small, and micro is more about actually the size of the audit file at the end of the day and what we're going to do with this audit file. Now, I often say if I wanted to, I could go and audit SAB Miller, massive multinational client. I could do it with RAC micro. We haven't taken away the audit quality. It's going to be a heck of a lot more difficult to fill in because, for instance, there are 4 working papers within RAC micro, and I'll show them to you probably next week, where there actually aren't any questions on the working paper. All it is a number of paragraphs where you can go and document, for instance, your knowledge of the business. So the whole idea behind RAC micro is that you're still getting the quality in terms of looking at the risks and things as we go through. You'll see more and more of that. But what we're adding onto it is just reducing the amount of workload that's involved based on the assumption that we're looking at, as I said, this low-risk audit. So just to distinguish between large, medium, and small, when we originally got the working papers to start developing RAC from Protect a Partner, if any of you are familiar with ISA 315 and have read it recently, it's a great bedtime reading matter, you will see that it is in ISO 315 that our management assertions are listed. And at the end of the day, when we audit, we're auditing the assertions that management have given us. In other words, they say to us that the financial records are complete, accurate, transactions exist, assets exist, so on and so forth. So those are the assertions of management. And there are actually 14 assertions listed in ISO 315. However, in close reading of ISO 315, what ISO 315 says is you don't need to go and stipulate all 14 of these assertions. You can summarize those assertions. And in fact, the IFAC guide for the audits implementation of ISOs for the small and medium audits actually reduces it down to 4. They speak about 4 assertions in their IFAC guide. We've actually gone with 7 as a summarized set of assertions. So that is the distinction that you will see when going from a large client to a medium client, and that's purely in terms of the number of assertions that we're going to be dealing with. Right, so with a large, you will be looking at 14 assertions when you're assessing your risks. With medium, you're looking at 7. And when we look at the next working paper, I'll go through that with you in detail, what those assertions look like. So then we had a large and a medium, and that's great. And one of the decisions that we made with RAC was that we were going to start following what we call a cycle-based audit approach. So we're not going to audit revenue on one audit program and trade receivables on another. We want one audit program that covers revenue and trade receivables. Now that makes sense. It is a business cycle, and certainly what I found when I was in audit practice, you'd have one clerk who does creditors, you have another clerk who does expenses, and they end up going to the same poor clerk at the client, their credit controller or whoever it may be, and the one is asking for invoices, the other one is asking for creditor statements, and they're basically asking all of the same questions about what happens in this business cycle, which can lead to frustration, and it does lead to some sort of inefficiency, because instead of one person getting a good understanding of the entire cycle, the entire business process around a particular business cycle, you've got 2 people who are trying to focus on a portion of it and maybe not getting the big picture, which can lead to maybe risks being missed or issues being left out or forgotten, or you think somebody else is dealing with it. So that's why we looked at a cycle-based audit approach within RAC, and as we go through the training you'll see how that's implemented. However, when we start getting to a small client, and this is where small comes in, we start saying, look, it's no longer effective to have a trade receivables and revenue section. Let's say, for instance, in a property company, because that property company has 12 invoices a year. The tenant pays on the 1st of every month, so there's no debtors. Why do I need to go and audit a separate cycle, look at business processes around the cycle, document my understanding of the business cycle? It's not going to be applicable in such a small entity. And that's where what we do is we actually, instead of cycle audit programs, we go down to basically just a balance sheet audit program and an income statement audit program. So you're left with 2 audit programs in the entire file. You still have some additional audit programs, so for journal entries you will still have an audit program and any other special risk items that you may choose, but ultimately you're auditing on 2 audit programs. So it's great for 1 or 2 people on the engagement. It's a very small entity. We talk about very low risks. We're not looking for risky companies to be audited on small, not because you can't, but just because it's going to be more difficult to go through the processes and the steps. So large to medium, we cut out the number of assertions, and medium to small, we cut out the number of cycles, and we're basically left with a balance sheet and an income statement audit program. Okay, if you have more than 10 line items on your balance sheet, probably don't select small, because once you start getting, well, in fact, our audit programs are limited to 10 cycles on each audit program. Otherwise, it just gets way over the top to try and complete. Then you're going to need to rather go for a medium if you've got that many components sitting in your balance sheet or income statement. But we'll have a look at that again as well when we get to 10.20 and look at the difference between the different sizes there. Okay, so that's basically it. This is the decision that you need to make. We do to some extent try and reduce the amount of work between large, medium, small, sorry I should say the number of questions, but it is very difficult to take questions out of a planning working paper, because what if that one key question was actually the important one for your small business that you're busy auditing? So we try and summarize, we try and make things easier, and we will show you as well as we work through some documents what those changes and differences are that you can expect. Now I just want to show you, if you have a look here for instance at 10.15, you'll see that the working paper here is telling me that this document is actually required, 10.15. It's saying document required, yes, detail level, moderate, okay? And the green blocks to the right gives you the opportunity to kind of override the selection that's been made. So let's say, for instance, in this case, 10.15, we're saying it needed to be complete on a moderate level of detail, but you know the document, you actually want more detail. You can increase the level of detail on one of these working papers if you so desire. You can never downgrade the level of detail. You can only ever increase it on any one of these working papers, and you can't make a working paper go from required to not required, but you can make it go from not required to required again. So if you just look at the options where it says yes, the only option in my drop down is a yes. Just to show you then, for instance, 11.15, we were talking there that it says moderate. Have a look when I select large, you'll see it automatically shows now as full. So it's now a full detailed document. So if you're wanting to see what impact these selections are going to make, you can go and see that in fact there are 5 documents that end up being listed with moderate. So there are 5 documents that we somehow summarize slightly when we go from a large to a medium. And in fact, most of the other documents don't ever change. So for instance, planning materiality, we can't reduce the amount of detail that you put into your planning materiality. You have to do that calculation the same, irrespective of the size of the client. Okay. So that is 10.15 and the audit file type selection. I'm going to leave this one as medium. This is my medium file. And we will now go and have a look at 10.20.